Today we're going to talk about why mortgage lenders want you to make at least 6 payments before you refinance. Now, if you are getting an FHA or VA loan, those loans have seasoning requirements, which means you can't even refinance until you hit a period that is actually slightly longer than that. What I'm talking about today is conventional loans. So if you're buying a house conventional, 5%, 10%, 20, 40%, whatever it is, often you're going to hear lenders say, hey, if you do at least 6 payments, then we'll do a free refinance. I've seen that one a lot recently. And, there's actually a huge lender right now that's offering a free buy down because they're scared of you refinancing within 6 months. And you're like, why do lenders care so much? I'm going to give you the real deal. So if you're new to this channel, I'm a mortgage lender licensed in 48 states. If you're not, say it with me. Anyways, I do a lot of mortgages. I've been doing this for 17 years. And this is one of those topics that people don't talk about, but I think you need to know because it's going to explain a lot of behavior. Because sometimes I'll have people call me, they'll say, the lender's saying I can't do this. The lender's saying, let's talk about it, okay? Now, first of all, if you're getting a conventional mortgage, a 30-year fixed, Fannie Mae, Freddie Mac, is there a prepayment penalty for you? No, you can refinance whenever you want. Really important that you recognize that because I've also heard some horror stories where lenders have said to people, well, you can't refinance. The only ones that have seasoning requirements, meaning that there is a limitation on the time period, is FHA and VA, okay? Conventional, there is no prepayment penalty. Now, the other thing I've heard is I've heard people say, my lender said if I refi within XYZ, I have to pay them XYZ dollars, okay? I've never seen that that's legal, ever. So if you have a lender telling you right now that if you refinance within XYZ days, you have to pay them this fat fee, I haven't seen that that's legal anywhere, and that is something you would want to report to the Consumer Finance Protection Bureau. Okay, so what is going on? It's messed up. Okay, I'm just gonna be honest, it's messed up. So when I first got into the industry, I worked at a bank. At a bank, this wasn't a thing. Then I went to a small mortgage company where this wasn't a thing. However, over the years, what's happened, and look, brokers deal with this, big mortgage companies, some banks, it depends on where the loan officer works. But for example, the way that I get paid after your loan closes. If your loan doesn't close, I make $0.0. Zero, okay? Same thing with brokers. If you work with them for 5 years, the loan never closes, $0, okay? So we get paid when the loan closes. Here's the messed up part. So let's say we do all this work, loan closes, you're happy, you're in your house, hurrah, rates go down in 3 months, you're like, yeah, I wanna refi. Okay, here's the deal. So with most loan officers, if you refinance within 6 months, they have to pay back any money they made off your loan. Yeah, seriously. And you may be like, wait, what? Imagine this. Imagine that you are a nurse, okay, or a doctor, and you are helping this person for a year, right? You're helping them, they're getting healthier, everything's good, but they have to live for at least another 6 months. Otherwise, all the money that you made for helping them, you have to give back to the hospital. You'd be like, what? It's crazy. It's crazy, right? You can't control if someone dies. You can't control if they get hit by a bus. You can't control if they don't take their medicine. You have zero control. So how could that affect your paycheck? Well, that's one of the things in the lending world that I would argue is pretty broken. So Dodd-Frank came out that was supposed to make it so that a loan officer would get paid for their work regardless. However, there's always been this clawback clause, and it's not the big mortgage companies that are absorbing the loss, it's the loan officers. It is. And look, this isn't a video so that you're like, oh, Jennifer, I get it, I'll never do that to anyone. No, it's a video so you understand why you may have someone saying to you, please don't refinance for 6 months, or why you might see a special offer but the offer's contingent on you making a certain amount of payments. It's because of this early payoff clawback, okay? Now, here's the other thing. If you're looking, because sometimes I'll talk to people and they'll be like, you know, I need to sell my house, but I want to buy the new one first. And then once I sell my house, I want to pay this one off immediately. I'm always like, look, I'm happy to help if you want me to, but honestly, seriously, please check with a credit union or bank as well, because literally what's going to happen is I'm going to do all the work on it. I'm going to get paid. I'm going to pay my team, right? And this is individual to me. I pay my team, and if you pay it off, I have to pay back this. I don't take the money back from my team. You know why? They did their job, right? They did their job. So if someone does their job, why should they get their pay taken back? It's messed up. It's messed up. And it's actually something, as I sit here and I film this video, that I'm like, this feels like something we need to change within the industry. But as a buyer, you know, look, if you are thinking that you're going to take out a loan just for a couple months, I would ask the loan officer. I would say, hey, look, like if I pay this off in a couple months, are they going to take back any money that you made? And if they say yes, I would probably talk to another loan officer where they don't do that. You know, generally at the big banks, they don't do that. You know, all the big mortgage companies where they just do mortgage, the bulk of them do, okay? And sometimes it's like, look, if you refinance with the same lender, sometimes they don't get hit as hard, or at least they're breaking even. But, you know, if you refinance with someone that you just met, et cetera, like, yeah, they're taking a hit, okay? And it's always like, I tell people, you know, because I'm never going to say to a client, I'm never going to be like, oh, can you just wait a few months? Like, I don't want my paycheck taken back. I'm not going to say that, because, like, here's the thing. We get paid well as loan officers, okay? And part of it is risk. And part of the risk is that could happen, right? You could sell your house. You know, there's a myriad of things that could occur. But I'll be really honest with you right now. If, for instance, if I have a conventional buyer right now and they're aggressively rate shopping me, can you do this? Can you do this? I'm going to back away. And the reason I'm going to back away is because I know that all that's going to happen is I'm going to work incredibly hard, my team's going to work incredibly hard, and I'm going to end up losing money from my paycheck because of this, right? Because we're in a market where rates are going down. So here's what I would suggest. If you're like, okay, you know what? I want the best deal. I want to be able to refinance every time rates go down over the next few months. Talk to the loan officer, talk to a bank, talk to a credit union, see if they're going to have their pay clawed back. If they're not going to have their pay clawed back, go for it, okay? If you're dealing with a loan officer where they will have their pay clawed back, you know, just realize they may say stuff like, hey, like, you know, please call someone else. And it's not because we don't want to be helpful. It's just, it's not a good business model, especially in my case where I lose money. That's the thing. I still pay my team, so I would lose money. So we're seeing a lot of that. The reason this video came up is because one of the largest lenders in the nation just unleashed a program where they're doing free temporary buy downs if you meet certain parameters. Doing a temporary buy down in a market where rates are going down doesn't make sense for the buyer, but it does for the lender because you're less likely to refi. So when you guys start seeing all this advertising, hey, if you do this, or if you wait, we'll give you this or that, it's literally just because of this early payoff nonsense that's in the industry. And there should be some sort of solution for it, because people should get paid if they do a job, but there's not. And look, it's not your burden. So right now, if you're like, oh, I really want to refi, I could save so much money, but I liked my loan officer. Guys, it's your money. You know, have a conversation with the loan officer. Are rates likely to continue going down? Would it make sense to wait? Would it not? I'll always be honest with my clients about that and be like, hey, here's where we are. This is the potential. It's up to you. So don't ever pay a lender, okay? I just want to make sure I put that in there, because I've gotten the horror stories where it's like, this lender said I need to pay them XYZ. You don't have to do that. And if someone's trying to deceive you, they kind of deserve to lose their paycheck. It's messed up, but it's true. If someone's telling you, hey, you can't refi for at least XYZ, and it's a conventional loan, meaning a 30-year fixed, not government loan, you know what, they deserve it. But if it's a loan officer that you trust, I would talk to them about a game plan, I would understand the time period, and then it's up to you. Don't feel guilty, you just need to be educated on this. And for VA and FHA, you can't refinance earlier. And honestly, it's one of the other benefits from a loan officer's perspective with those loans is that we don't end up in positions where we've done all the work and we're giving back our paychecks. So I just wanted to fill you guys in on this because, you know, I was talking to one of my friends just the other night and she's not sleeping. She's not sleeping. And I'm like, you just have to accept it. You know, I had 1 year where rates had dipped and I had so many EPOs on the first 2 months. It took till like June to catch up. It was brutal, but it's part of the business, okay? So watch out for the ads, you'll see them. That's why it's happening. You know, if you're gonna be taking out a loan on a temporary basis, ask the loan officer if they're gonna get their commission clawed back. And look, there's good loan officers at mortgage lenders like me, there's good loan officers who are brokers, there's good loan officers at credit unions, and there are good loan officers at banks. So I would just be mindful of that because that may be why you see, you know, sometimes people will be like, this lender's ghosting me. And I'm like, yeah, you told them you're gonna pay it off in a month. That's why, okay? So look, questions, comments, drop it in. Do you think this is right in the industry? Anyways, thanks for watching, guys.